Ladies and gentlemen, federal employees, today we're talking about how you can take large amounts of money out of your TSP and reduce the tax impact. Because if you do it in the wrong way, you could be facing a tax nightmare because the implications can affect a ton of things in your financial life. So we're going to dive into those things today. If you're new here, so good to have you. My name is Dallin Haas. I'm a financial planner who helps federal employees just like you get the most out of your money and retire confident. So let's dive right in. This topic is actually based on a question, which I'm going to read, that was submitted by a viewer just like you. You could submit your own questions in a link below. And this is what the question reads. They say, I am 66 with $590,000 in the traditional TSP. I want to withdraw about $100,000 to help my daughter build a commercial building for her business. Looks like I could withdraw about $57,000 before going up into the next tax bracket, which is the 32% bracket. Should I take out $50,000 this year and $50,000 the next year? And if I send the proceeds directly to the building contractor, is it still considered income? Assuming it will be this year. Okay, so this is a great question, and let's kind of summarize that situation. We've got a federal employee who he says about $600,000. Okay, he says he has about $600,000 in his TSP, and it's all traditional TSP, right? It's all pre-tax. He doesn't have any Roth TSP, at least per this question. And he says, I need $100,000. I want $100,000, right? I want $100,000 to help my daughter, or whatever he wants to spend on. It really doesn't matter. It's the same difference tax-wise. He needs $100,000 for a project. Okay, and he's wondering what are the things he can do to lessen the tax blow. Okay, one of the questions he asked explicitly was, what if I send this $100,000 straight to the contractor? Does it still count as income if it never came to me, right? And the answer is yes, it still counts as income. If the money leaves the TSP at all, okay, if it leaves the TSP, it counts as income. The only exception to that is if it goes to another retirement account, okay? For example, an IRA, okay? If you move it to an IRA, or let's say you move to a new job and they have a 401k and you move it over there, that wouldn't count as income. But if it goes to any other place outside of a pre-tax retirement account somewhere, you're going to have to pay taxes regardless of whether you pay it straight to a contractor or anything else. You got to pay taxes, okay? Now, there could be other exceptions given other circumstances, but to use anything for personal gain, okay, like this, the odds of you not having to pay tax on it is basically a big fat zero, okay? So we got that out of the way, but what are some ways, what are some things we can legitimately do to lessen this blow, okay? Because, again, like this person in the question, in FERS, if they take out $100,000 from their TSP, that's going to skyrocket them into higher tax brackets, right? Right now, they're probably in the 22% bracket, right? Or even lower, maybe at the 12% bracket. And taking $100,000 out of their TSP is going to skyrocket them into probably the 32% or something like that, right? It's going to skyrocket them up, right? And if they need $100,000 from their TSP, if they need $100,000 net, how much do they have to take out first to be left with $100,000 after taxes? I don't know, 130, who knows, right? Depends on their exact tax bracket. But let's say they need to take out actually 130 first to be left with $100,000 net, right? You got to keep that in mind if it's all pre-tax TSP that we're dealing with, okay? So, long story short, any amount you take out adds to your tax bracket for that year, adds to your taxable income, and that's why taking out huge lump sums like $100,000 or $130,000 at one time, first, it will skyrocket you in your tax bracket, and if you're close to 65 or 65 and beyond, and you're on Medicare Part B, well, Medicare Part B premiums will actually increase if your income increases as well. So your tax bracket may go up, and what you pay for Medicare may go up as well because of this large withdrawal. So you want to be very, very careful before taking any large withdrawals. Now, one thing he even mentioned in the question, which is a great strategy, is what if he split up the withdrawal into different tax years, right? What if, let's say in 2024, he took out half of what he needed, And then the next year, 2025, he took out the rest, right? And you can actually take them just a couple months apart and it still work, right? What if the December of 2024, he took out half of what he needed, and then the next month in January, he took out the remaining. It's 2 different tax years, so the tax implications will be blunted and spread out over multiple tax years, which in most circumstances is what people want to do. There's always exceptions, but whenever we can level out and not have huge spikes in taxable income, that is certainly the things that we want to do, generally speaking. When it comes to taxes, if we can smooth things out over your lifetime, generally in those circumstances, you pay less taxes over time. It's really when you have ups and downs and spikes and valleys that you're going to get killed and pay more money to the government than you really have to, right? Which I'm all for paying taxes that you do, but we don't have to leave a tip, right? You don't want to pay extra unless you have to, okay? So those are the biggest things to consider. Is if you need a big withdrawal, can you spread that out over time, at least a couple years, if not maybe a bit longer? That would help spread the tax burden out over multiple years so that your tax bracket and things will have less things to look at. But of course, look at your situation, see how much money you'd have to make before going to the next tax bracket. Maybe the amount of withdrawal that you need for your situation won't affect your tax bracket. I'm not sure. It of course depends on your situation, but I hope that's helpful. Now, if you have questions you want to submit and for us to talk through on one of these episodes, again, there's a link below to do that. And if you want personalized help in your financial situation, go to our website. There's links below, haasfederaladvisors.com. We're here for you every single day. We help federal employees retire confident, and we absolutely love it. So check us out and have a great rest of your day.